Welcome back, traders. Thanks for joining me here today. The next long-term pattern on our list is the pennants. Pennants are continuation patterns where a period of consolidation is followed by a breakout, thereby forecasting the continuation of an existing trend. One of the most powerful and reliable long-term continuation chart patterns. As we can see on the price chart, this chart pattern is denoted by two converging trend lines connecting a series of sequential peaks and troughs. This chart pattern can also be referred to as a triangular flag pattern. In a bullish trend, this pattern can occur as a bullish pennant. While in a bearish trend, this pattern can occur as a bearish pennant. The pennant chart patterns are made up of three components, which are: number 1, the pennant pole. Number 2, the two converging trend lines called the pennant flag. Number 3, the breakout point for the continuation. As we can see on this price chart, the pennant pole is the initial price move. The distance of the bull pennant price move should be measured from the last low swing upward to the highest peak of the pole, while the distance of the bear pennant pole price move should be measured from the last high swing down to the lowest trough of the pole. This pennant pole price movement can later be used to forecast the potential measurement objective of the price movement from the breakout point of the pennant chart pattern. The pennant chart pattern has almost the same trading strategy approach as the flag chart pattern we have discussed in the previous study of this trading course. Let's search for another example of the pennant chart patterns in the market. Here's an example of the bullish pennant on this chart here. To determine the pennant pole, we need to take the measurement from the swing low here to the highest swing here. We can then replicate this pole measurement value to predict the potential bullish future move from the breakout zone. Let's search for a bearish pennant. Okay, here's an example in this market. To determine the pennant pole, we need to take the measurement from the swing high here to the low of the swing here. The pennant of the pattern is the key factor to this pattern. The pennant needs to be well formed. The pennant trend lines should be converging at a roughly equal slope. How can we trade the pennant patterns like a pro trader? Due to my years of trading experience, there are two effective ways to trade the pennant pattern formation. Number 1, during strong breakouts in a strong trending market. Number 2, long entry after a bullish price breakout in a bullish pennant that's accompanied by the formation of a higher low to the descending resistant trend line. Or short entry after a bearish price breakout in a bearish pennant that's accompanied by the formation of a lower high to the ascending support trend line. Most times during a price breakout of a pennant pattern, a price retest may not occur simply because these patterns technically support the idea of trading in the direction of the dominion trend in the market. Therefore, you may end up missing a nice trade setup waiting for a retest of validation of this pennant pattern. How can we trade the bullish pennant pattern breakouts? I will demonstrate how to trade the bullish pennant chart pattern with the example on this trading chart here. As we can see in this bullish trend, after price formed a consolidation phase, which transformed into a bullish pennant. The next step is to study the candlestick's relationship to the upper resistance trend line here. We can see the last swing that led to the bullish close to the upper trend line of this bullish pattern was a higher low swing if compared to the last low swing here. The next step is to buy if we can see a strong bullish candlestick closing above the upper trend line of the bullish pennant pattern. The safest zone to place our stop loss should be at the low of the last higher low swing here. We can then proceed to target a 2 risk-reward ratio as our take-profit target zone. Alternatively, the technically accepted take-profit target level is to replicate the measurement objective of the pole value from the point of bullish breakout level from the upper resistance trend line here upward. But make sure you trail your profit once you hit 2 risk-reward ratios. How can we trade the bearish pennant pattern breakouts? To trade a bearish pennant, we need to look out for the consolidation of price medium, which transformed into a bearish pennant in a bearish trend. As we can see on this price chart, after price rallied to the swing low here, price went through a medium of consolidation phase. There was a bearish breakout of the lower trend line of the pennant pattern here. Stop loss can be placed above the upper trend line here. A short position can be placed at the bearish breakout for price below the pattern structure here. Traders can implement the 2 risk-reward ratio, or simply target the measurement objective structure of the bearish pennant pole. To do this, simply replicate the value of the pole measurement from the breakout level here and run it downward. Remember, trading is a game of probability. Therefore, always trail some profit when you hit 2 risk-reward ratios if you plan to implement the measurement objective option as your take-profit target level. This is how to implement the pennant chart pattern trading strategy for the continuation of trends in the market. Also, make sure you trade the pennant patterns in the direction of the trends on the higher time frame. Looking forward to seeing you in the next class. Peace.